You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network. Maybe it's too exciting. The market's already exciting enough. Maybe we need to dial down the excitement here on the network. Either way, we got you covered here. Lots of great programs carving up the options and, indeed, derivatives and financial markets these days. Know you guys are consuming them en masse. We're trying to crank out as many as we can to keep up with the demand. Of course, if you haven't subscribed to the full network yet, you just listen to Vol Views. Make sure you head on over, grab the full network in your podcast device of choice. A lot of great content coming at you these days. And, of course, all of you have been waiting for Vol Views this week. There's a lot of vol to discuss, so let's get to it. We got quite the panel joining us today, starting off with our old friend holding down my cohort seat, my volatility partner in crime. He is the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, welcome back to the Volatility Views program. Not a lot of vol to really discuss, so it's going to be a short show this week. What do you think?
Yeah, it's going to be really boring. It's going to be really you could say volatility is not sheltering in place. Let's just put it that way.
Yes. That's why we have you on, for these little gems like that, because you're right. It is indeed not cowering or sheltering anywhere. And also joining us, I'm pleased to say he's back in the saddle again, our old friend holding down the MIAX hot seat this week, Mr. Shelly Brown, the executive VP over there at MIAX. Shelly, welcome back to the program. I wish it was under better circumstances, but you know what they say, kind of inauspicious circumstances for the broad world and economy are usually good times for volatility. So we got a lot of vol to talk about today, Shelly. Welcome back, sir.
Mark, glad to be back. Batten down the hatches here at home, but glad to participate.
Yeah, I think we're all in that self-isolation mode, which just makes more people want to listen to shows and have things to talk about. So we're here to fill that need. We're actually kind of splitting the MIAX hot seat. Got double duty. Maybe you and Tom, I don't know, maybe you're scooching into the seat together, in which case it might get a little uncomfortable there as the show progresses. But we are also joined by a newcomer to the program and indeed to the network. He is Tom JARCK, the volatility product specialist. So a good guy to have on. Tom, welcome to the Volatility Views program.
Thank you, Mark, and hello, everybody.
And Tom, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give us a quick overview of your background in the derivatives markets, as well as what the volatility product specialist does day-to-day over there at MIAX.
Okay, sure. So my background, I've got 10 years of market-making experience back in Chicago, way back when in the SPX pit. Traded products there for quite a while. I then moved to the New York Wall Street scene and worked in various sell-side institutions. I don't want to name a few, but in my roles there, I was always trading volatility products. I ran a few of the different index trading desks. So trading everything from, it was obviously pre-spikes, but trading everything from VIX, long-dated volatility, short-dated volatility, some of the exotic, the lighter exotic products like options on variance, volatility swaps, variance swaps. So pretty familiar with the space. Dealt with a lot of the larger institutions over my career. So happy to be on the show. And what does someone like me do at MIAX? So I am working with your other guest, Simon Ho, quite a bit. And we are, I'm basically working with him to be, unite, bring together the client base on the, in the U.S. for the most part right now, but globally, and trying to, educate and familiarize people with and answer any questions for spikes and just, be a part of the team and broadening the awareness of the great product.
Glad to hear it. Glad to have you with us. Yes, our buddy Simon, he wanted to be on again this week, but I don't think he could handle yet another 5 a.m. wake-up call over there. So we're letting him sleep this week. It's rough duty over there for him, but he'll be back on again. And then that wasn't enough, listeners. We're also joined by an old friend of the program, even though he hasn't been on in quite some time, Mr. EUAN Sinclair. He's a partner over there at TALTON Capital Management. EUAN, welcome back to Volatility Views, sir. It has been too long.
Well, thanks a lot. If it's been too long, that's kind of on you, right? I don't.
Oh no, it's totally on us. Yes, we've been busy doing many things.
No, I'm just joking. I'm sure you've got other people you want to listen to as well.
Well, getting to that, it has been a while since we've chatted with you. I know you've been up to a lot of interesting things since then. I know you had a startup in the software realm for a while and a bunch of other things. Kind of just break it down really quickly before we dive into it. What the heck have you been up to since the last time we chatted, sir?
Well, I was working for a market maker as sort of a risk manager / supervisor. Risk management's kind of tough because you only get involved when something horrible's happening. So eventually it kind of wears you down. So I left there. I started a fintech company that was providing factor-based stock analysis. And we eventually flipped out of that. And I joined / started TALTON Capital, which is a volatility trading hedge fund. We mainly do index vol and the VIX.
So nothing at all to discuss here on the show today whatsoever. We should just hang up now, sir. What do you think?
Well, honestly, I try to keep things about the same level of excitement all the time because I think a lot of traders get kind of caught up in it and they get bored when vol's low and then they get frantic when vol's high. And I don't think either of those things help you.
Well said. I think our audience is getting frantic. They want us to get into the vol review. So without further ado, we'll do it for you, listeners. We'll get on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we, surprise, review the week that was and still is from a volatility, trades, and trending, and analysis, and unusual activity, and all sorts of perspectives. And coming into the show this week, once again, it's been quite a week filled with volatility. If you wanted your vol, you got some. Maybe a little more than you can handle. Maybe this is collectively more vol than the markets can handle. We'll discuss that. I think we have a listener question about a similar type topic there. But we're certainly getting up there in terms of just how much vol and sustained vol can the markets take. And then coming into the end of the week, we saw a lot of sell-offs and we saw some rallies. Seemed like maybe the talk of stimulus and all these other things were starting to really perhaps calm some of the fears out there, even though earlier this week we did see some extreme, shall we say, levels. We saw VIX cash closing at an all-time high, 82.69 back earlier this week. That surpasses the previous high set back in the teeth of the financial crisis of 2008, November 20th of 2008 to be precise, of 80.86 at the time. Just to give you a bit of frame of reference, and all this coming from our buddy Mr. Schwartz, the flow master, who was on Option Block earlier this week. Just to give you a frame of reference for where we are versus where we were then. The SPX then was 752. That's a little bit higher than that right now. So that kind of gives you, we always talk about volatility has to have a context around it. That gives you how much the context has changed, even though we are at a similar level from a VIX cash perspective. VIX cash actually hitting a high of about 84.5 this week on the 18th, which is one of the big days out there for most of the products, hovering at about a 61.5 right now. That puts it up, about 13 handles from where it was this time last show. Spikes at about a similar level, right about a 62, a little bit north of 62. That puts it up about 15 and a half handles from where it was last week. Spike hitting a high also of 84 on the 18th of March. And of course, coming into today, it seems like things are poised to be pretty dire. There was all this new, not really joked, but we discussed on the show not too long ago when China was in the depths of their contagion. We said, well, at least maybe one good side to having an authoritarian government is they can actually lock down large swaths of the population, unlike the way we could do here. At the time, they had locked down about 60 million people. And we said, could you ever imagine a scenario where we locked down, let's say, California in this country? It would never happen. Well, lo and behold, last night, California governor came out saying, yeah, we're locked down. So everyone seemed like that would send us off to the races to the downside again. And yet the market was actually rallying this morning ever so briefly. It seems like, you wait, it's like the weather. You wait 5 minutes, the market's going to turn. And that's exactly what happened today. Now coming into showtime, we're seeing all those gains erased and most of the major indices back on the move to the downside. Dow off a little over about 1.25%. The S&P off about 1.5%. NASDAQ uncharacteristically the laggard, only off 0.5% out there. So a lot of stuff to discuss here. EUAN, as our guest, you haven't been on in a while. We'll start with you, sir. A lot of things I'm sure are coming across your radar. What is lighting up your volatility tape these days, sir?
Well, I think the first big takeaway, you mentioned 2008. This is nothing like 2008. So the high level in the VIX is, but that's about it. The actual driver of what's happening is very different. 2008 was largely limited to the financial sector, which is a relatively easy sector to bail out. If the financial sector is running out of money, you give them money and everything's pretty much solved. The problem we have here is this is a supply side crisis as well as a demand side crisis. So the Fed can lower interest rates, but people can't go out and spend money because you can't go out. So I think the underlying economics is far different. It's spread over a much wider range. And I think the government has a lot fewer tools they can use to help. And I know vol's come off a lot today, but I'm kind of looking and thinking, when people start seeing people they know dying and massive layoffs, things might change again. So I know I've seen a lot of people who are like, well, I'm conditioning my models on what happened in 2008. So I think that's a bad thing for two reasons. First, like I said, the economics are different. Second, you should never rely too much on one data point. I mean, that's not very good statistics, is it?
No, we have discussed this on the show. A lot of people have brought that up because it's really, in recent memory, the closest thing we have, of course. And as we mentioned, it was at some similar levels. So obviously the mind immediately jumps back to 2008, and we compare and contrast. But as I just outlined, the markets, the SPX, everything else was in a much different state back then. Also, 2008, the volatility marketplace as we know it was still far more nascent. Obviously, things like spikes didn't exist, but also things like VXX, the VIX futures and options were still pretty much growing. They were nowhere near the volume levels and things like they are right now. So comparing back then to right now, I've often kind of said it's kind of like apples and tangerines. They're in the same category, but they're not very similar at the end of the day. There's a lot of different nuances. And you're right there, Ewan. The other underlying mechanics of this sell-off are far more widespread and far-reaching. And I guess if you start digging down that rabbit hole, probably a little spookier as well, Ewan.
Yeah. I'm not too worried about my own health, being young-ish and healthy-ish. And I don't come into contact with huge groups of people. But I think this is going to be absolutely devastating for the unemployment numbers. And I think I have no trust in this government right now to do anything that will help. I mean, you still saw this emergency package, which was being passed very rapidly. There were still like 8 senators who voted against it. And they voted against it for purely nitty reasons. So I have very little faith that there's anyone really in charge of the situation. And I know it's fun for traders to make fun of the Fed, because every trader thinks they know more than the Fed. Some guy who did, undergrad economics at some university you've never heard of thinks he knows more than the Fed chairman. But I think at least when the Fed and the Treasury Secretary, particularly when Geithner was there, those guys kind of know what they're doing and they do stuff. But, without naming any names, Trump doesn't do anything. He just hands off, responsibility to other people. He's still leaving it in the hands of the governors. So I'm kind of, in the long run, I think I'm really concerned. Not so much from trading perspective, but from, are there going to be 20 million homeless people perspective?
Of course, your day-to-day job there these days is as the partner over there at TALTON. So from a volatility perspective, from a risk management perspective, as you were alluding to earlier, what are you doing as a result of this? Are you, we actually have a poll out there right now. We'll get to some of the results out this in a little bit. Have you been trading pretty actively on the vol side? Were you hedged coming into this? Are you kind of sitting on the sidelines, letting the madness kind of sort out? What is the vol play over there at TALTON right now?
Well, I mean, when we're short, we're always hedged. We took off our shorts slightly before things went crazy. I can't remember the VIX level, but, the initial rise. And we had a few longs on there, which we, in retrospect, took off way too early, but we still made a little bit of money. Since then, we've been kind of nibbling a little on the long vol side, which has been tricky because at these levels, you don't get much gamma. So options are kind of behaving the way complete beginners think they behave. There's very little vol-driven change. There's very little non-linearity. They sort of behave as pure directional bets, which you either get completely right or completely wrong. So, I mean, we're trading, but kind of small. I'm okay with that. We're up a couple of percent, and I'll take that.
Well, yeah, we said that on the show before. I mean, these are not environments where you need to trade size to make a lot of money. These are environments where you could be pretty... In fact, that was the title of one of our shows this week. Stay small, stay nimble, stay alive. And you could take little nibbles and still do fairly well without breaking the bank out here. Shelly, you guys haven't been on in quite a while as well. Obviously, you've been busy working on a lot of things behind the scenes. Unfortunately, we had to bring you back on a week like this, somewhat inauspicious from many perspectives out there. But what's been lighting up your tape and the team over there at MIAX since the last time we chatted, sir?
Mostly market structure, working with clients, helping guide them from a technical perspective, how to deal with the exchanges. Obviously, worried about the structure of the marketplace in general, although I'll say everybody seems to be holding up very well. There's still plenty of liquidity. Our exchanges have been holding up well. I give credit to all the other exchange families. They've done well, too. It's been very interesting times. Really, my biggest concern is when am I going to go out and be able to get a meal again?
Yeah, those are some of the issues everyone has, right? Can you get checkout or takeout or any of that kind of stuff? Obviously, I know it's kind of hard to think about these things right now because there's so many other, perhaps more pressing issues at hand, but we get a lot of listeners asking us about the status of things like the spikes futures and when they could be reviewed. It's got to be challenging for you guys right now, I'd imagine, to even get any meetings, if that's even possible, with the CFTC. So is all that kind of in limbo right now as the government is dealing with this other crisis?
Well, it's been a tough couple of weeks to get to the regulators. We are making progress on that front. We're still hoping to relaunch the future sometime this mid-late spring. Nothing's definitive. But the working with the commissions has been has been fruitful so far. They're very very interested in the product, but certainly their attention has been elsewhere the last 2 weeks, as it rightfully should be. There's much bigger structural issues that need to be addressed right now than whether or not we should relaunch the spike futures. From our perspective, it's one of the things at the top of our list. But again, given what's going on, it's a little bit on hold. I wish we had the futures up. I wish we had tighter markets in the spike options right now, just because there's huge opportunity from an exchange perspective. Volumes across the board are up, but maybe for some of the wrong reasons.
You're right. It's hard to argue that they should be dropping everything they're doing to approve another financial product when they're trying to regulate and deal with all the ones they already have, and explosions of volume, explosions of volatility, all sorts of issues. Actually, surprisingly fewer issues than you might think. We'll get to that in a minute. On the exchange side, really quick, we talked about this on some of our other shows, but we are in uncharted waters for a number of reasons, not just the historic level of vol and everything else and the volume out there, but the fact that as of a couple of days ago, when ICE took their exchanges off the board, the options world, the options market has now effectively become fully electronic. Obviously, MIAX always in the electronic camp, but of course, SIBO has a legacy, very strong pit presence on things like SPX. They shut that down last week. We saw Philly shutting down this week. CME shut down last week. The last of the Mohegans. We saw San Francisco and indeed some of the Amex floor and the others in the ICE arsenal there all shutting down this week, which pretty much puts us effectively at 100% electronic the day. A lot of market makers, I know when I first walked on the floor of the SIBO back in 1997, a lot of market makers were already dreading it then. They saw the ISE on the horizon and they were terrified. And yet here we are. Took a little while, all the way to 2020, but now we finally have our first days of 100% electronic volume. I'm curious, Shelly, are you as surprised as I am that it seems to be going off without a hitch so far in terms of the volume is staying up there, and we haven't really seen massive glitches or crazy out trades or anything like that, Shelly?
Yeah, like I said, things have been going very smoothly, and I just want to clarify for some of the novices maybe listening to the show that Mark's referring to the trading floors temporarily closing, but all the exchanges are still up and running 100%, but they're 100% electronic. It has been a very smooth transition, Mark. We've certainly seen shifts in volume across exchanges as floors have closed. It'll be an interesting experiment on Monday when the NYSE floors close. They were still open today. People need to realize from an open interest perspective, I think today's expiration, this may be the largest open interest of all time expiring. We also have more strikes traded today than we ever have with the big sell-off and the added lower strikes. I believe there's 1.3 million individual options traded today, and that 1.3 million options are traded across 16 exchanges. And given that and the traffic flows, everything's held up very well. And just from our perspective, we've seen traffic flows in terms of quote traffic go from an average of 40 billion quotes a day to a couple of days last week. We saw across our three exchanges in excess of 170 billion quotes.
Shelly, I was going to say that, a lot of the exchanges maybe need to send you a personal note of thanks for pushing them and calling them out on making sure they had their technology at the highest levels and up to speed. Because without, I think, you guys coming in and really pushing technology and back innovation and making and being really good on the electronic execution side, I think that 3 years ago, if this happens, the performance of the option markets and the futures markets and derivatives markets as a whole is maybe a very different conversation than what we're having today. And that's, partially the MIAX. And I think, a little credit where credit due, you calling out some exchanges for not doing their job and then getting them to do it. So, hats off, my friend.
I very much appreciate that. That's very humbling. We've certainly tried to make the industry better, and certainly a lot of the exchanges for competitive reasons have gotten better. Everyone's done a really good job, as have the market makers and the order routers. I mean, everybody's been able to keep pace, and that's a good thing. I think it in a much worse situation right now had the markets not held up and had as much liquidity as they have, and provided people the opportunity to get out where they need to get out, or add risk where they want to add risk.
All right, Mr. Greasy Meatball, I bought you time here, sir, but there's a lot to unpack here. Obviously, just an unprecedented week from a vol perspective. Almost any measure you could look at, it's historic. Shelley just mentioning the open interest, the fact that it's all electronic. We had a VIX settlement in the midst of all this. How crazy is that? So a lot to unpack here, sir. What was on your radar? What were you and the crazies talking about and up to this week over there in the pit chat, sir?
So there were a couple of things. One, there was a lot of fake news that was pushed around about liquidity and whether some market makers that would never go out of business might go out of business. I think one of the things that, talking about the kind of how this is different is I've not heard any real rumors or about any of the major liquidity providers blowing up. The Fed, having learned its lesson from kind of the Lehman blow up, has stepped in and made sure that none of the, there is enough liquidity that on their end that none of these real market dislocations are going to, mark to market is not going to blow up one of these funds. And so we've not seen a lot of real major liquidity. We've seen some smaller mid-tier market making firms. We saw one in particular kind of blow up, but that hasn't been the issue. So liquidity has been great. What I will say was a real risk that happened this week, and maybe people don't know this. Wednesday, close of business Wednesday, we were in real danger of seeing the TVIX and, to a lesser extent, UVXY completely throw the vol market for a loop. And we were in a position where we could have had kind of a vol-apocalypse or a vol lapse at any point in time on if Thursday had opened one way or the other. There was a major market dislocation in volatility that has come off today. That's part of the reason why we're down. As I'm speaking right now, you've got the market down 50 and the VIX down 10, and you've got VXX and UVXY, all the TVIX, all those names are down, and the reason being is that there was a just massive vol futures and ETP dislocation. So what happened was the leveraged ETPs, primarily TVIX, lesser extent UVXY, started gaining so much value that they were starting to basically swallow the entire vol space. So let me put this in perspective real quickly. Right before all this began, middle of February, TVIX, so that's the Credit Suisse kind of double VIX, and UVXY combined were worth about half a billion bucks, somewhere around that range. And then at the peak on Wednesday night, they had gone to about $7.5–8 billion in value. And while on a small scale, that's nothing crazy, when you then look at how much open interest there was in all of kind of the April vol space between VIX and spikes, you only had about $15 billion worth of kind of open interest in April. The VIX futures, total open interest times the value of the VIX future was only about $14 billion. So you have two ETPs that are worth half the market. You throw in VXX, you're looking at just a giant portion of the overall value of the April future, and it almost caused things to completely blow up. Frankly, I'm a little surprised we didn't see kind of this vol unwind forced markets higher. They didn't. But if you're asking yourself, why are, on Wednesday, why would the VIX be flat and April, which has a month to go, settle above the cash? And then the following 2 days, why would VIX be down 20 points when we're down? Why would the VIX futures go from, why would the April VIX future and the spikes implied future go from 75 to 58 in 2 days without any real positive news? The answer is that implied volatility markets, vol markets, got absolutely thrown for a loop by the speed with which the vol ETN started to rally. TVIX got over $1,000 at one point now, and so this is something that if you're going to be a VIX trader, you're going to be a vol trader, you're going to be a spikes trader, and you're not watching kind of the net AUM of the ETPs when we get these vol blowups, you're setting yourself up for a disaster. We could have had a day. TVIX could have gone from 1,000 to 100 in a day in the right environment, and it also could have gone from 1,000 to 2,000 in a day in the right environment when we got that kind of move. And maybe part of that is the speed with which we rallied. What I would say to Ewan's point is this is nothing like 2008. It's kind of like if 2015 and 2008 had a baby, is the way I put it. 2008 for markets was kind of like a volatility marathon. 2015 was kind of like a volatility 100-yard dash. This feels like a volatility 10,000-meter run in that I think the recovery is going to be very U-shaped, but the dip that we're seeing from an economic standpoint is giant. But since the financial institutions do not appear to be about to collapse, I think that puts us on a very different footing. You're not seeing any bank runs. People aren't actually worried about their money. They're worried about the economy, but they're not worried about their bank being worth nothing or their house being worth nothing. Most people that I know are operating like as soon as this is over, they're going to go out and spend a bunch of cash. I will say that is, it's really unique what I'm seeing in terms of how everything is, how this is such a, I don't know that we'll ever see something like this again, but just a couple of really important points on what happened this week and how crazy things got.
Speaking of crazy, just hearing breaking news right now. We here in Chicago, sounds like we're going to be following suit pretty soon with California. A shelter-in-place order going to go into effect tomorrow here, which means effectively you're not supposed to leave your house unless you really, really have to. So, yeah, things are continuing to spiral in some, shall we say, interesting directions. Things are heading in an interesting direction, Mark, when we're talking about TVIX at the top of the show. It's like TVIX is kind of like the offensive lineman on this show. You only hear about it when things are going haywire, and it certainly did go haywire. You said it threatened, 1,000 here this week. Just think about that, listeners. TVIX threatening 1,000. If you're not familiar with TVIX, and I encourage you, if you're not, we're not huge fans of it here on the show. We talked about it many times, usually in somewhat disparaging tones. It has had issues in the past, usually outside of times of massive dislocation like this. The times of dislocation like this, it's another level of crazy out there. Just to give you some frame of reference of what we're talking about. About less than a month ago, TVIX was in the 40s, and it got up to threatening 1,000. So you could see why very quickly the AUM and everything else going on out there would have been perhaps a little bit unmanageable out there for them. So you're right, Mark. We did kind of dodge a bullet from that perspective. So I know myself and a lot of people in the vol space were kind of watching the increasing growth in AUM of those products with a little bit of trepidation. We didn't know TVIX has a history of imploding when you don't want it to. And so if that had happened again, that could have had all sorts of disastrous consequences for the vol space. I know you usually like to get your volatility straight from the fire hose, going out to SPX and things like that, maybe slinging a little bit of VIX on the side here or there. Do you play around at all with the vol ETPs? I mean, I know these days you at very least have to watch them, right? Because just look at what we were talking about there. And were you watching and perhaps as concerned as others were about this lingering impact, this tidal wave that was going to come from levered products like TVIX?
I do more than play around. I love them. I think they're fantastic products if you know what you're doing. And the problem is most people just don't know what they're doing. And a lot of it's laziness. They just don't read the prospectus. And they don't understand what levered funds do. Like this whole thing about levered funds go to zero. And it's completely not true. And they're confusing like averages and medians and all sorts of stuff. So I've really got, I don't know, I wouldn't say no sympathy because, if it blows up, but you've got to be aware of how these rebalances work. And one of the interesting things is, okay, so TVIX is short gamma, right? Because as the market goes up, then they have to essentially buy VIX to sort of, rebalance. But that effect, normally if vol gets higher, gamma, and hence nonlinearity of options, gets lower. But with TVIX, it's the other way around because as you're saying, the notional price is so high that we're seeing huge moves with that rebalance. And I think this goes back to something very early in the last conversation. We were hearing rumors about, someone blew up. And for a start, one of the things that's different now is we have social media like Twitter, which is, full of nonsense. That rumor seemed to come from one completely unsourced blog post of some traders off the floor looking at the VIX move and deciding it was liquidation. And it almost certainly wasn't. It was almost certainly a rebalance of these ETPs. So I think that's a huge change that people haven't really cottoned onto yet. And the other thing is with options for a long, there's a short, right? And, the long gamma balances out to a certain degree the short gamma. But with these ETPs, the only person doing the rebalancing, the issuer, is always short. So there's no offsetting position, really, in an option sense. So that, again, exacerbates these moves.
That surprised me that you trade these. I know the last time you were on, granted, it's been a while. I know you were more of a straight SPX. That could have been part of your, what you were trading over there at Bluefin at the time. They probably weren't playing in a lot of the volatility ETPs, but it sounds like over there in your new gig over there in the realm of TALTON, you guys are playing a bit in these levered ETPs, or is this more for the personal EUAN SINCLAIR vol account?
Oh no, both. I mean, there's huge opportunity in these. Yeah, they're really dangerous, but you can generally hedge this stuff. There are options on them. I think they're great. Now, there's almost always a better trade in these than there is in the VIX futures. Interesting.
You're interesting. You're the first guests we've had come on in a while to actually extol the virtues of these products. Usually it's the other way around. But you're right. I like what you said there, that it is true. If you know what you're doing, and that's what we've always said with these products, if you're going to play in them, you got to understand the nuances and the risks and the sometimes unanticipated risks you can encounter trading products like this. And if you're okay with that, if you understand what they're up to, they have a use case. As long as it's pretty short term and you know what the heck you're up to while you're doing it. If you're just putting it, the old set it and forget it and put it in your portfolio. I guess some folks might have lucked out. They picked up a little bit of TVIX a month ago and they come back a month later. Oh my God, it's nearly 1,000. I guess that could have worked out in the near term here. But other than that weird aberrant scenario, that's not usually the case out there. Let's look out there really quickly, see what else is lighting it up out there from a vol perspective. We like to talk about the VIX futures term structure, and we say often only partially jokingly that the answer to all of your volatility questions is lurking somewhere in that volatility surface out there. And it actually, compared to what we've seen of late, this VIX futures curve is actually perhaps not as aberrant as we've seen in weeks past. How long ago was it where we saw the futures were at 26, the cash was in the 50s, and then we saw all sorts of other crazy blips and crazy backwardation and crazy bids to the election premium, all these other things. A lot of that, obviously, as the market has zeroed in on a couple of major issues, a lot of that having kind of gone by the wayside. Mr. Meatball, anything attracting your attention this week in the old VIX futures curve, sir?
Oh, just a little. It's not like, and just kind of continue to harp on these ETPs. the volatility of the April future was as volatile or exceeded the volatility of the VIX index. And that absolutely, that's like unheard of for, that's basically unheard of for a future that has 30 days to expire. We also had expiration for spikes and VIX. And, spikes being a newer product, I'm going to go out on a limb and say that what was Spike's final settlement? VIX was around 69 something or other. What was the final settlement for the March contract? Shelly, do you happen to know?
77.64.
All right, so I'm going to tell you that for those of you listening, that may be the highest settle we ever seen spikes ever. So that's a pretty nice. That's something that we witnessed from a historic perspective. We saw probably this week. We may have seen the highest spikes index we ever see. We may have, and we probably saw the highest spike settle that we'll ever see. There's so much that needs to come in place for us to have a settle that's 77 again. You need to have volatility explode and explode during the week of settlement in order for us to kind of have that. And boy, did we get it. So that curve is backward. It's flattened up today. Even again, we're down 60 and vol still in because of what kind of happened this week. So the dog that was wagging all the vol space tail this week was the ETPs, and that the VIX futures curve was a major part of that.
Shelly, Mark just mentioned something interesting. We talked about the madness of settling VIX this past week, but you guys had to obviously settle spikes here this week as well. I think you must have been kind of smiling a little bit this week because this was kind of what you designed. I wouldn't say this madness is what you designed spikes for, but one of the things you guys took into account when you were building spikes was that you could use multiply listed options out there to actually settle the product, which I think probably made you sleep a little bit easier in a week like this instead of having to rely on a single, perhaps, point of failure like over there in another product. So were you perhaps not sweating settlement as much this week, Shelly, or was it still kind of biting your nails time?
I certainly was sweating settlement going into Wednesday, not knowing what the market was going to do Wednesday morning. I'm sure you're aware both on MIAX for spikes and on SIBO for VIX, decisions were made to delay the opening in the settlement in those products till 9:45. The concern being that we were so close to the 7% down limit on the opening that having any sort of disruption during that auction would actually could potentially have yielded very, very bad results for the settlement. I think things went really smoothly. Certainly went very smoothly on our side. Once we opened SPY, we were settled inside of about 200 milliseconds. So it certainly was interesting, but I slept much better Wednesday night than I did Tuesday night.
That's true. There's always that perhaps potential for an outlier out there, right? Speaking of outliers, Shelly, you guys got to get the Bloomberg folks on the horn because they wrote this crazy article a week or so ago going nuts about how someone bought 100 lot of the par calls. I think they were in March out there in VIX land. Call them up because I was looking today and someone playing similar, actually crazier levels out there in spikes this morning. Someone gobbling up 100 lot of the April 130s. Yes, April 130s expiring on the 15th. So I do believe these are the weeklies. And for $1.20, 100 times. So there you go, Shelly. You guys got to ring up Bloomberg after the show and say, hey, where's the love for our 100 lot? It's even crazier than that one.
Exactly. I'll put Tom on that one for me.
There you go. Right after the show, as one of his new duties, is haranguing Bloomberg. How come they don't find all the exotic 100 lots? Speaking of options paper, let's break it down really quickly here. Then I think we got a lot of questions from you guys, too. I want to make sure we start squeezing you guys in. Obviously, a lot to discuss here this week. We may even run a little long this week, listeners. But, yeah, looking at what's lighting it up out there. Obviously, in Spikes Land, we've been talking a lot about that 1x2 for some time. Well, that 1x2 trade is set up pretty much for times like this, right? So he's starting to take it off. In fact, I'm surprised he hasn't taken off. He or she hasn't taken off more out there right now. So the OI is down to about 53,000 as we're seeing some unwinding of most of those 1x2s, but there's still a pretty sizable position on 35,500 of the April 25s against 17,750 of the April 17s. And then we got the June 95s, July 24s, and June 75s. Round out the top 5 for a total of about 53,000 contracts open, which is interesting that they haven't unwound more of that 1x2, perhaps anticipating more vol to come there, listeners. Let's head on out to VIX land really quickly. And again, we've kind of seen this dance play out before a little bit now. So the fact that we're off as much, let's see, how much are we off as we speak? Because we were just saying the sell-off was starting to exacerbate. Now we're seeing the S off about 2.5%. Since it was off not even 1% when we started talking, the sell-off is exacerbating. You think, we'd see a lot of paper out there in VIX land, but coming into showtime, there wasn't a heck of a lot of paper on the tape, not even 500,000 contracts. That, again, goes to show that we've seen a few shocks to the system now, plus or minus 3% days and some even more, setting off circuit breakers here. So when we see less than a couple of percent, the market kind of shrugs these days. The ADV, though, is getting up there, 1.3 million up. That's up from 500,000. I should say up 500,000, from last week. So a lot of paper flocking in there. Really quickly, let's break down let's just go top 5 here. That's all we got time for here in VIX land as well. Top 5 hot positions out there. Number 5, the April 22 puts, 143,000 of those. Number 4, the May 35 calls, $1.53 open there. Number 3, April 45 puts, 157,000 there. Number 2, April 20 puts, 178,000. Number 1 with a bullet. Again, this kind of reflects we're post-settlement, because it's only 183,000 contracts get you to the top number 1 spot here in VIX land. This is in the weeklies, the April expiring on the 1st. So April 1st, 23 puts here. So a lot of play here on the 23 strike going out pretty soon. Total of about 9.3 million contracts open. That's about 5 million on the puts and about 4.3 million on the calls. Big day. Let's just look really quickly. In VIX land, volume-wise, was actually Tuesday. So not Wednesday, but Tuesday. Wednesday's only 1.03 million. Tuesday was 1.5 million. And the big print out there was the May 32 halves, going up 117,000 of those throughout the day, including a 20,000 lot for 32 half. Pretty deep in the money, listeners. $20 and about 30 cents. And paper was buying those. So hopefully not someone buying those back. We also saw a lot of crazy call verticals that day. April 50, 70, going up a couple of times, 20,000 times each. And the June 27, 35. So perhaps someone rolling, getting the heck out of the way of the thunderbolt that is VIX to the upside this week, or maybe taking some off. Either way. And then Monday was also a pretty active day, about 1.36 million contracts. The big print out there on Monday was the April 45 puts, 135,000 of those going up, including a funky, looks like maybe a risk reversal going up as well. The May 40 puts against the May 29 calls, which is all sorts of backwards to how we usually would see one of those going up these days. 18,850 times. Looks like paper leaning towards the bid on both of those, or it should be the offer on both of those. And also, I'd be remiss before we got into your questions if I didn't touch on VXX. Again, getting back to the ETP world, what insanity we've seen unfolding out there in the ETPs. VXX getting as high as into the 70s not too long ago. Right now at about 56 3/4 or so coming into showtime. That's still up about 25 handles from where it was this time last show. Let's see really quickly where we're hanging on. 59 1/4, so taking back up as you might imagine. We topped out here in VXX land at about 77.32. So all of you who like to play that continual erosion game, not so much of late for all the myriad legion of reasons we discussed there at the top of the show. Number 1 position out there in VXX land right now, in case you're wondering, it's nearly 100,000. By the way, the ADV is up to almost 700,000. So VXX is rocking and rolling. Not so much today, though. Only 281,000 contracts on the tape coming into showtime. I'm guessing that may have accelerated a bit since we started the show, and the sell-off has picked up a pace. Number 1 position out there in VXX land are the April 25 puts, nearly 100K, about 92,000 of those bad boys out there right now. It's 60-40 puts to calls. If you're wondering out there, in the top 10 for VXX land is about 3.6 million contracts open. All right, we got to get to some of you folks here as well. So without further ado, let's head on out to your Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail. You guys, as you might imagine, a lot of questions pouring in. So maybe we'll see if we can go. If I can keep everybody a little longer today, we'll see if we can answer a few extra, because so many of your questions coming in. This is the fun one. At times like this, we always get these interesting theoretical questions. I guess it's a sign of the times which direction they're looking at. Usually they ask us what the theoretical downside is for VIX. And we've always come in around, I think, around a 5.5 or so, is maybe systemic kind of volatility. Now, the question going the other way. This one comes from Matt. He says, I know volatility has no theoretical limit. It can always go to 1 million, but is there a practical ceiling where you think VIX can't really get above, not without the world falling apart? Very interesting question. I was joking here at the top of the show about how much sustained volatility the marketplace can take, but you're asking something even more specific. How much of a one-time crazy moonshot insane vol spike could we ever really anticipate? Some sort of worst case scenario. The president is assassinated, China is marching troops onto our shores, all found out at the same second, and the markets react collectively and lose their minds. Something akin to that level of a catastrophe, that kind of thing. Vince, I almost called you Vince. EUAN, as our guest here, I give you the dubious honor of getting a first crack at this, sir. I know you like these kind of theoretical thought questions out here in VIX land. So if you had to guess VIX/spike/volatility in general, what in your mind is the practical upper boundary? This far and no farther, before beyond this level, it's kind of all madness. I think EUAN has muted himself. He was too terrified. Well, tell you what, Mark, you discuss that. I'll see if I can drag EUAN back onto the show here. What are your thoughts on the theoretical upper bound for VIX and spikes, sir?
The theoretical upper bound. So, the vol is like a rubber. Vol is like a rubber band. It can stretch, and stretch, and it's like a rubber band that doesn't break. It'll stretch, but it has to pull back to where it's from. I think 87, they said it got to about 180. And so I would say that the theoretical bound is going to be, because we do have circuit breakers that would stop the market from moving more than 20% a day. So what if we moved to 20% a day? What is that in terms of annualized vol? Any idea on that?
I'm sorry, I'm trying to get back Mr. Sinclair. Mr. EUAN, do we have you, sir?
Yeah.
So,
I've got an answer for that too.
The theoretical bound would be 20%, whatever annualized vol of 20% a day would be what? 300 VIX or 3,000 VIX. Am I wrong?
Yeah, it's like 3,200.
Yeah. That's the theoretical bound for. If you want to know where is the theoretical bound, it's at the 20% daily circuit breaker.
There you go, Mr. EUAN. I'm not sure if you heard that question, but we had that question about the theoretical upper bound of what VIX could theoretically actually do. You concur with that? You think we could even go higher, or maybe it's lower?
Well, are there circuit breakers on the upside? But to be honest, from a practical perspective, yeah, there isn't an upper bound on VIX. So I wouldn't worry about that.
That's never stopped our listeners before here. Let's see if we can squeeze in. We got a lot of people who want to chime in. Let's see if we can get a few more in. Let's see. Short. A lot of people asking about VXX, as you might think here. Iron Condors. Put selling. One here for Simon, actually. So we'll save that one for where Simon is here. In general, here we go. Tog wants to know, a lot of people have questions about VXX. You'll have to be the surrogate for all of them here, Tog. Tog says, hello, Vol crew. Well, hello, Tog. What are your thoughts on getting back on the short VXX train? Was just reading this guy's piece where he's talking about doubling down again. Thoughts and thanks for the guidance in these troubled times. And he includes a link to, I believe it's on Seeking Alpha, where this guy wrote, here's why I doubled down in my VXX short. You mentioned you trade some of the leverage stuff. Are you a VXX fan? Do you watch it at least, EUAN? And if so, what are your thoughts on what Tog and a lot of folks are asking here about getting back on the short and VXX train, sir?
Yeah, I do trade it a lot. I would be... Okay, so there's a couple of things. Selling something because it's high is a really bad idea. You've got to have a reason beyond it's high. Because, we're still anchored to the idea of the VIX being like 18. Psychologically, that's where we think it is. But you've got to get over that. I don't see any compelling reason to sell VXX here. The term structure's not in contango yet. I think you've got plenty of time to sell it. I'll just wait. I don't think you have to do it now.
Mr. Meatball, you on board with that train? We talked about it before, just how absurd the levels of volatility are out there. So maybe from a premium harvesting perspective, maybe there's opportunities. But in net selling, the actual level of VXX, where do you come down on that, Mr. Meatball?
I mean, it made sense a couple of days ago when it got completely dislocated as like a short-term trade. But the idea that it's, when it's moving against you is, that it doesn't make sense. So what I would say is that VXX is the thing a lot of people need to understand about volatility is not buy low, sell high, or sell high and buy low. It's buy high and sell higher and sell low and buy lower. And with term structure the way it is, and with volatility likely here, VXX, especially, now that we've kind of gotten that weird market dislocation out of the way, it still is probably more likely than not to be higher this time next month than lower because of the fundamentals behind how the futures curve affects VXX, UVXY, and the TVIX.
All right, everybody. We kind of went a little long with some of your questions, but so we'll have to do a combo crystal ball as well as what is coming down the pike here from you guys. By the way, let's just pay off our crystal ball from last week really quickly. Last week it was me, it was the Greasy Meatball, and the once and future Dr. VIX, a.k.a. Mr. Rhodes over there. Mr. Rhodes playing uncharacteristically a little bit of the low game, coming in at 37. Yeah, we didn't hit 37. I was kind of the more middle of the road. I was feeling a 43.5, and we did not get there either. Mr. Meatball uncharacteristically playing the highest of the bunch. He was at a 49.38. Obviously, listeners are at about a 65 or so out there, and Spike's at about, what are we at? About 65 3/4 or so out there. So, excuse me, 67.5 now. So we didn't. 20 handles ain't going to cut it. No winners this week. So let's just go around the horn. As our guest, EUAN, I will start with you, sir. If you have a prediction for where you think VIX Cash and/or Spikes will be at this time next week, if you are bold enough to make it, sir, have at it. I will allow you. Then, if folks are interested, they want to learn more about TALTON, or maybe check out some of your, reading and writing and musing on the vol space, where should they go? What should they do, sir?
You can hit me up at eSinclair at taltoncm.com. That's CM for capital management. You can also find me on Twitter, Sinclair EUAN. Okay, so the VIX Cash, I'll say 58.
58, not an unreasonable level. I will mark you down here, and if you win, fabulous prizes will be yours, sir. All right. And also continuing around the world, I won't make you guys guess unless, Tom, you feel like it. But Shelly and Tom, if folks are intrigued, they want to learn more about what's going on at MIAX, or maybe you want to leave a little bit of hint, a little bit of a tease of what's coming down the pike from you guys in terms of spikes. Now is the time, gents. The floor is yours.
We're looking forward to getting the Spikes Future we launched this spring. You can reach us and get any information you want on our website, miaxoptions.com. Spikes are there and available for trading, and we're excited to see where things go. But again, we appreciate what everybody's done in the entire industry to keep the market solid.
Yeah, trying times out there, completely electronic from an options perspective, and it seems like so far, like you mentioned, open interest records, volume records, things no one ever anticipated, massive pit oriented products like the Eurodollars and the SPX and other things being able to go up in an entirely electronic environment and not really break and still do a lot of the paper that they were expected to do in these very stressful environments with wide markets and liquidity providers obviously being a little bit anxious out there. Speaking of liquidity providers, we're hearing some breaking news now. It sounds like we were talking earlier about maybe there were some liquidity provider issues, and people have been asking us all week, are you hearing anything? We have not. Sounds like Ronin, ironically, Ronin Capital, maybe unable to meet capital requirements at CNE and actually starting to auction off Ronin's assets. If that is indeed true, that's coming from CNBC, usually a reliable source on that stuff. That is indeed a untoward development out there. Ronin, pretty storied name in the SPX and indeed the volatility trading space, so we don't like to hear stuff like that. Mr. Meatball, last question for you here, sir. First off, what's your crystal ball pick for next week? And then if folks want to check out your news and your seminars and your vol trading club and everything else, where should they go? What should they do?
Yeah, so I'm going to say 49. What did I guess last week? 49.
You guessed 49.38 last week.
I'm going to guess 49.38.
Wow. Are you talking against your book?
Sub
or are
50
you?
VIX.
Wow, interesting. You think it's just the unwinding of some of this settlement, some of the TVIX stuff, or you think we're actually going to be...
No, I think I don't know a lot of great reasons to want to go into the long weekend long, but what I will say is that we're getting really close to the goalpost no longer moving. Once the goalposts stop moving, that's when you're going to start seeing some of the value buying step in. There is just an amazing opportunity to go in there personally. I started doing some put selling to try and find levels to get into this market because, frankly, below, I want to say right around 1,600 in the S&P, you're talking level like the equivalent of the 666 level from the May 9 low of 08. And again, I think that those are some levels that I get really interesting. Yeah, but we do see a little bit of Ronin unwinding. That's probably a little bit of this, and like you said, I think that just the shelter in place order probably freaking things out for a second. I think that eventually gets bought here. Maybe not today, but over the next day or two. All
right, so I've been fading for a bit here, and it hasn't been going my way. Maybe that's the sign. Maybe if I'm at the breaking point, maybe that's the sign that vol is indeed ready, poised to come in, but I'm not going to fade. I didn't fade that aggressively last week, but still, I was off 20 odd handles. So maybe let's dial it up a little bit for this week. I was at a 43.5. I like EUAN's level there. I was thinking about maybe a little bit higher than that, though. I was thinking more along the lines of, let's say we keep, I hope my prediction is not correct. I hope we do see more of like what the meatball is talking about, a little bit of a calmer, saner, cooler heads prevailing, but I'm going to come out and say, unfortunately, that's not the case. I'm going to say not that far from where we are right now, about a 62 out there. So then there's your market listeners. We got Mr. Meatball on the downside, 49.38. I think we all hope he's right. 58, Mr. EUAN there in the middle, and myself playing the rare upside roll here this week, going at a 62. And on behalf of the Greasy Meatball and Mr. Sinclair and Tom and Shelly from MIAX, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. I have to do a Mother All Questions episode. Check out the boot camp episode we did this week to answer a lot of your questions there. We have other ones hitting, Advisor's Option coming back. We're going to talk a lot of structural volatility and analysis of volatility there on that show next week. Had a great chat with the folks over there at Northern Trust. That's hitting the network, I think, today. That's actually our final in-person interview for some time. The studio, everything else off limits to all guests. Now make sure you check that one out and see what they're doing in terms of hedging their sizable client assets over there, using options, their thoughts on these volatility regimes, and a lot more. We know you guys want content. We're trying to get it to you more and even more out there, so make sure you stay subscribed to the full network. And if you like what you hear, head on out to your platform of choice. Leave a review out there. It continues. People are out there searching for quality information in these trying times. So continue to help the influx of new people continue to discover the network out there. Because I think a lot of people, quite frankly, could use this. And we'll see you back here on Monday for more of the option block. That kicks it all off again. We'll be back here again on Friday for more Volatility Views.
Volatility Views is brought to you by MIAX. one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.